Hi, everyone. So let's shift gears a little bit and talk a little bit about China. So we know the Chinese stock market has suddenly started to pick up quite a bit, and most of this started after DeepSeek was launched and the AI story kind of took off in China. And this comes despite all the news of tariffs being weighed on China, right? So it was 10%, and now it's another 10%. So these are the new tariffs in addition to what was put on in 2018, 2019. Now, when these tariffs did come on, China's response was very measured. And we argued that one of the reasons that the response was measured was because they were waiting to take other measures to sort of fortify their own economy. And now we have some of those measures. So China recently had their National People's Congress. Yesterday was the first day, 5th of March, and they came out with a few very, very important things. Some measures they want to put in place to help the economy and help domestic spending. So, what did they say? So, first of all, they set the target at 5% GDP growth, which is, relatively high compared to what the banks or the analysts are forecasting. And they've set the inflation rate at 2%, whereas now they're in deflation, which means negative inflation. So that's a good thing, right? And this comes in spite of all the tariff news. So they are going to put in measures. They are going to put in fiscal spending, so government spending. They are going to cut rates, which is monetary easing, right? And all of this is going to help support consumption and investment in the economy. Now, if you remember, we already saw the president meet some of the private companies, particularly the heads of the tech companies. And so there is a lot of support behind the private sector as well. They are also looking at managing their debt and stabilizing the property sector. So, a number of different things. We don't know the timing of this. However, we think that these measures are very positive. And finally, the government is ready to go all in and support the economy, support consumption, and support even the private sector in terms of the property sector and the tech sector and various other companies. So this is a good thing for China. I think, in terms of the stock market itself, yes, we might see pullbacks here and there, but all in all, I think these should support the stock market to a large extent. Thank you.